Hi everyone. Today is September the 19th. It is the post FOMC day. And we had a spike up and then a pull down. So 50 basis points with 100 more basis points priced in before the end of the year. So for those of us who are looking at things from my particular position, and I wanted to go through the weekly charts very quickly in terms of what we're seeing. Clearly, we are in a buy the dip formation. This is an intraday trade, right? And we want to think about how the market is feeling here. Also, we've got quad witching tomorrow. We are in a space where we broke to brand new highs, could not hold them. Now, all the data sets are saying, listen, after the first rate cut, we normally see 11 to 18% within a year or something like that. And my suspicion, if I were to take my tinfoil hat out of the bottom drawer, where I do keep it to pull out on occasion, I believe this move is twofold. One, the interest rates that the Fed is paying are monumental. Two, the commercial real estate industry is essentially in significant throes, as it were. And there are a lot of notes that need to be refinanced. And so this is going to happen, but at what cost? So my thought is that this is basically a collusion event. So we have to think about the bigger picture and watch carefully in terms of seeing who is leaving and who is staying. All right? So that being said, if we get above 563 today, this chart is likely to test its high. I suspect a lot of stops might be running, but if we cannot get up and over the close of last week, we are going to fade. And that fade event looks like 553. And then potentially 539. Now, I am not going to bet on a fade because that is not what the trend is telling me. However, we need to take a lot of thought process into gear if we see the rates drop and the market fail to hold these levels. Now, I don't think that's going to happen at the first pass. I think people are going to get excited. They're going to move some of their fixed income over, and we'll see what happens. All right? But that's what we're looking at for SPY. Here is a look at the Qs. And we're going to look at the weeklies first. Now, we can see that sector rotation is clearly engaged, right? We've got the Qs lower. They're not at new highs. We are inside of the close of last week. And so this chart, clearly not out of the woods. All right, we need to get up over 476 and some change before this feels good. And guess what? Yesterday we did it, and everybody sold at the pass. So we've got to keep an eye on what the news is saying about inflation being in check and what else might be going on. If we can't break above the open of this week, which is 475, we are very likely to step down into 466 and then hit the value area high on the weekly formation at around, I have no idea what this number is, 456, but the big fat round number of 450 is much more likely. Okay? For upside pressure, we're looking over the next couple of weeks at prior highs. That's 486. Pardon me. Excuse. Pardon me. We have 486 and then 496. Okay? So clearly a path upward. Dips are still buys. Notice the dip from 2 weeks ago. Complete buy zone. That's going to be the place where we go, all right, where's the buy? Notice all the volume here. This is the high volume node. We can't see it on anything but the weekly charts. And so that's what we're staring down, maybe even 437. Okay, but the shorts are definitely going to be hurting if this price action continues to rise, and we're going to climb up the wall of worry with shorts closing and forcing the market higher. Let's take a look at the diamonds. Diamonds are at all-time highs. Remember, the Dow is the place that foreign divestment comes into first. It's at all-time highs, but guess what? It tested all-time highs, but now it's sitting at the high of 4 weeks ago. Closing the week above here, 416, is a breakout formation. That's going to be more continued upside. Else, we go into last week's VWAP, which is 410. Now, we don't play the diamonds very often, simply because the volume is light, but there it is. Here's the IWM. It's the only one that moved to the north. Now, you can see that I've got a lot of notes here on the IWM, and it is breaking out. Most definitely. There is a measured move from the value area every single time. It's not at all-time highs. Every single time it's moved up here over the last several weeks, it's retraced. I do not expect that to change. Lower interest rates are going to raise the cost of things because it's going to put more money in the market. Okay, so here we are, IWM popping out, but I still think the highs are going to be sell zones. What would be very interesting is if it came to 210 and it held. And we'll be watching for that. All right, big overview. Now let's get into the charts on the formations that mean something to us. Here we are at 570. We're breaking out. 8 o'clock candlestick has not started yet. That's the candlestick that we draw around. Look at all the congestion and the breakout here. If we were to do a measured move for this break, right? Let's say the range was top to bottom. Let's just eyeball it, right? Because we really can't tell what's going to happen here. Hello. Let's draw this rectangle again. I'm going to draw it down to here. So let's do a measured move on this. Let's clone it and then move it up. And we're sitting right at the top of the measured move at 570. I would not be surprised to see this chart come in. The 4 a.m. open, which we're going to use this on. Here's our 4 a.m. candlestick. Holding this high of that 4 a.m. candlestick is going to give us our first pullback formation in the charts. This is what we are staring down. Our 8 o'clock candlestick is going to give us the next bit. If after that we can't hold it, we are very likely to fill the gap coming back into the value area, and that number is about 566. Let's take a look at the Qs. Also breaking. Big wide area. Let's draw our midnight candlestick. Where is it? Oh no, sorry, I'm in the Qs. This is the 4 a.m. candlestick. That's what we're going to stare down, right? Our 479 we can see on the weekly chart. So the pullback there ought to be where we had ourselves to. Remember, you draw your 8 to 9 o'clock candlestick. If we lose that 479.60 area, we've got a gap fill event that's first going to test this old high, 478. It's also very near our whole moving average, so that's going to bring us our first buyers to the fray. If we cannot get back up over 480, we're going to fill the gap. For the upside, you're like, yeah, Anne-Marie, but what is above us? What if that happens? Well, you've got your 8 o'clock candlestick formation that's going to come in, 8 to 9. You could say, all right, I'm going to do that, or let's take a look at the measured move. Let's use the top of this range and the bottom of that range. Again, eyeballs, right? Let's clone this. If my fingers would learn how to do that. Yeah. Okay, we clone it. We've got the measured move puts us up here at about 483. And then, of course, we know 486 is going to come from the weekly formations that we just saw. All right, let's jump into the futures. We're still in the rollover contract here. Next week it'll be, ES1. It'll be the same chart, but it'll now be called ES1. All right, so what are we staring down? Very big. Take a look at the formation. A ton of sideways pressure. Hard to say how to measure this one because it's so messy. We could be looking at, let's just do it this way. Let's use fair value area high to fair value area low. And let's clone it. It looks to me like it's above that area already. No, sitting right on top of it. We know that if we break out, we're going to be looking at the next ledge higher. I've got a Fibonacci drawn, that's 5796. And then, of course, 5800 will be the big fat round number that we would essentially expect to see a test of, something like that. We don't really look at the 4 a.m. candlestick for too much, but it is the open of Europe. And so I do have that ledge sitting here. Here's the wick at 57.55. We'll have buyers there because we also have an hourly candlestick break at that zone. So we're going to see buyers sitting somewhere around that area, I suspect. And then this is the 4 a.m. Candlestick for Europe opening. That's 57.38.25, 57.33. Let's take a look at the NQ. Reminder, pullbacks are buy zones here in the zone. Let me make sure that I am trying to measure this as well as I can. I'm going to leave some of these wicks out. That's about, let's pull this a little bit lower so we have wicks and bodies there along with the breakout. And then I'm going to clone it and we're going to move it up. We can see that there's a little bit of room that the NQ has to the upside. And that number looks like, for the measured move, 20,072. Pullbacks clearly are buy zones. Look at how they're walking this Hull moving average. It's pretty remarkable. But the volume by trend, not pretty, right? We'll see how that breaks. We'll see how that breaks. If we are to draw a Fibonacci on the range, of the last wave, we can see there are numbers like 20,025 and then 20,133 above that 20,072. My thought is, listen, if you can look 2 candles to the left and you see trend, for the candle that you're in, go down to the last open/close of the last hourly candlestick. You take the long there, your risk is the low of that candle, and then you're off to the races. Trim every time you hit a new high, and then trail your stop, right? 20,000 is a big fat round number. We could be very choppy around there in terms of what's going on. Clearly, in my mind, there's a lot to watch here, okay? The midnight low happens to be this wick. The midnight high, or is that 4 a.m.? Sorry. Is that the 4 a.m. candle? Yes, it is the 4 a.m. candle, excuse me. The midnight high-low is down here. All right, so that's what we're watching for the NQ. Let's take a look at the YM. I did draw, where did I draw that Fibonacci? Let me see where I drew that. Aha, high-low. So same as the formations here. Testing a brand new high, pulling back, still holding. Take a look. 2 candles to the left, hourly chart, that's where you buy. Once it pops up into the regions, you take the sell simply because there are wicks forming up here. It's not like it's closing like this. There are wicks forming up here, but the dips are still being bought. Do not try to top tick this market. I don't suspect that's going to go well. Let's just follow trend and be patient in terms of motion. This is the 4 a.m. candlestick. Look at how wide it is. It's monstrously wide. And this here is our PM candlestick, our opening hourly range candlestick, and this is the opening range of the last 2 days before. So there's a ton of heavy congestion down at the 42,000 area. Dips are buy zones. That's what we're looking at right now. So pull it in. If it loses the low of your prior 1 hour and doesn't immediately recapture it, you need to get out. Okay? Now, don't leave it right at the low because somebody will run your stop. A little below that area, and then you've got your stop, right? But you can see the price action struggling here. It's going to be another very interesting day. Stay alert. Note the big formations, and when you're ready to take your position, you can collapse into your 5-minute and simply look for price action that tells you that you know what's going on. And here, you can easily see that they are buying the dip. Could they come into the VWAP and buy it? Absolutely. Absolutely, they could come in. Here you are at the point of control. This moving average is doing nothing but undulation. So you look at this other one. I made that a 50, right? You know, leave it at the 50. Just watch for the motions and good luck. It's going to be a very interesting next couple of weeks. All right. Take care, everyone, and I'll see you on the streams.